anybody else, but this was probably the most unique, surreal, depressing Thanksgivings we've had. It's always good spending time with your immediate family, but we've also had a lot of immediate family time. So, yeah, but hopefully everybody had a good time. If you got together with family, hopefully you stayed safe, stayed distanced, all the 9 yards, wore your mask, and so forth. Anyway, let's just kind of jump right in. Last stuff I want to talk about today. We got a lot of good news we want to talk about. We got some bad news, 2021 kind of commentary. Like always, if you're watching this live and if you've got questions, comments, want to heckle me, whatever, go for it. Put it in the comments on the Facebook feed, and I'll see it on my side. And we'll go from there. So I want to talk about some loan limits and what's going on. In case you haven't heard the news, what's happening with new construction starts, kind of the current market forces, what's happening in terms of demographic shifts and things that are in big demand, and what's spurring people to do stuff right now. A little update on the Portland metro area. I got bad news for Portland, so that's going to be a sad one. We're on the radar for the wrong reasons, but we'll talk about that here for a little bit. I'll talk about why this is just going to be kind of a fact of life, and we'll sort of talk about why I've been saying some of the things I've been saying. And then I'll wrap up. There's a little bit of kind of 2021 thoughts here at the end that kind of popped up in this past week. So just kind of want to talk about that sort of stuff. So with that said, let's just jump in like we always do. So kind of take a look at the hey Jeff, how's the market? Well, here we go. The current lockbox activity stats. This is every time Gene and I go to a house, we open the door, it registers activity on the lockbox counters, if you will. So week over week, we're down a little over 5% in the Portland metro area. Puts us more or less on track with where we were last year. I think it's pretty comparable to this time last year. So that's a good thing. It's still a hustle bustle market. It does feel like it's kind of slowing down and calming a little bit, but it's still active and pretty frothy out there. So there you go. Portland, we're down 5%. Across the river on the Vancouver side, they're down 8%. So vacation as Christmas slide is starting for Vancouver. It looks like this puts them, if you have to kind of go back, it's a little bit of an eye chart to go back to look at how that compares to this time last year. I think they're a little bit behind last year's pace. So whether it's a little bit of fatigue, a little bit of people just more so than ever wanting to ramp up, get ready for the Christmas break, who knows? So it is down. It's negligible difference, but it is down, somewhat compared to this time last year. That said, homes are still flying off the market in Vancouver. So it's, the lock boxes are down, but maybe it's just that it's the casual shoppers are down because the buyers are definitely still happening up there. So there you go. So let's just jump in. I want to talk about the kind of what I think is fantastic news, especially in markets like Portland, where we've got prices are going kind of stratospheric. Our average prices are $516,000. So that's your average. It means it gets tough to buy a somewhat affordable home. So our prices are up, which created problems with jumbo loans versus conforming loans, and the added costs and fees for those. So Freddie Mae, Fannie Mac, still butchering that. I can't talk this morning. They raised their loan limits. It was $510,400 was the limit for a conforming mortgage. So let's say you had $40,000 for a down payment. Before, you were shopping at no more than $550,000 price points for homes, unless you were prepared to do a jumbo loan and could get one where you were okay with the fees, the reserve requirements, so on and so forth. So otherwise, you were stuck at $550,000, right? Because then you're $40,000 down, $510,000 was your net. So there you go. They have now increased those limits to $548,000. So arguably speaking, you're shopping at almost up to a $600,000 price point. So it's a significant increase. And given the way that our prices have been climbing and skyrocketing, this is way overdue. So it's a very good news development for people in our market, just from that affordability standpoint, of at least from a financing standpoint, being able to get into those higher priced homes, or even just your basic homes that now have those high prices because we've got such high demand for housing up here. So that's kind of your good news there on the loan side. That said, we got a couple kind of headwinds happening on the refi market. And some of these things have been kind of priced in here a little bit, but they're talking about these refinancing your home is about to get more expensive, there's a thing that formally starts tomorrow called the adverse market fee. And it's just that it's a money grab. It's a secondary layer of fees that are going to get baked into the refinancing markets. And so it's kind of like an added like origination fee type of thing that you got to pay for. It's just going to make that refi a little bit more expensive. That said, if you're buying into a house that you look at, hey, this is my long-term home, I'm going to be here for legit 10 years, 20 years. 10 years is the new average for homes lately. Then, a little added fee, probably not a deal breaker. It just still sucks because you got to pay this extra pile of money to do it. To some extent, that's been getting priced in for a while. This is where I wish I had one of my mortgage guys on here with me and he could give a real update on the adverse market fee. But so I think they've been getting kind of forward priced into deals, but they're formally starting tomorrow for sure. So what does that mean? It's on average, I think it's $1,400 of a fee. And so if you roll all that stuff in, homeowners who on average were going to be saving $133 on their mortgage payments are now only going to save $118. So you're taking it in the shorts for $15 a month. It's not the end of the world, but if you're like me and I'm so cheap, I squeak when I walk. It sucks, man. I hate that. So it is what it is. So you have to kind of take the good news, bad news of. The good news is the rates are still incredibly low. Bad news, got the secondary fee if you're going to refinance your house. That said, it's probably still a good thing to go do. So take a look at it if you're still at I'd say probably mid fours and up. I mean, I'm sorry, I was gonna at that point 4% or up on the mortgage rate. If you're still one of those holdouts, you may want to talk to somebody because you can probably save a significant amount of money. All right. The good news here, we're going to see a little bit of good news, bad news here. We're going to talk through this stuff. The new construction housing starts at the highest point of the pandemic era. So we're going back to March for this. So this headline is kind of stupid, but I mean, I'll take whatever victory we can get. Anything that relates to more construction starts is a good thing, because as we've talked, nationwide we have this deficit of houses that are available for sale. More and more people can afford homes. They want homes. They need homes. COVID has really highlighted the need for not only a home, but the right home with the right features. And we're going to talk about this a little bit more. But we don't have enough houses. And this is absolutely true in Portland. And with our urban growth boundary, this doesn't go away anytime soon. So I don't know what the right answer is here, but at least they're trying to build more. The most since March. So here it is in graphical sense, and this is why I say it's a great headline, but it's also kind of a who cares, right? So let's go back to October 20, those levels compared to October 19, 2019, a year ago, kind of where we were a year ago. So yeah, it looks better compared to March, April, but anyway, I guess the intent here is just to kind of show they're trying to build in some areas where they can. So I'll take it as good news. I'm not super optimistic. The big thing that's been happening right now is because housing markets have been so competitive because there's that lack of housing. It's put a lot more pressure on new homes. People are just saying, let me just buy new because now, hey, I know this house is COVID free. Nobody's been living there. I can just kind of negotiate a contract. I may have to wait a little bit longer, but you know what? I'll do a purchase contract with the builder. It'll be easier. Brand new house. I can choose everything. It's great. So that was an effective strategy for a while. And now let's look at what's happening now to the new single family home inventory. And it's everything's dropping, right? The homes are going away. So whereas that was a safety net, I think, for a lot of families, even that's going away now because those homes are becoming more scarce. Competition. Here you go. So get ready for wait lists for higher prices, for just being told no. So we'll see what happens. Certainly in the Portland area, to find new construction, it's a little tougher. But so there you go. So with the pandemic and everything that we do right now, this whole market, everything about this, it all comes back to COVID and what's happening and how COVID has been a kind of a paradigm shift for society, right? So in terms of where are you going to live, what's that house going to look like? Almost half of all Americans now want to move. And so you have to kind of think through some of these because people are, hey, I'm in a dense area, San Francisco or New York or places where I don't want that density or I don't have to because I can work from home now. You've got people who have lost their jobs and just need to move because they can't afford the home anymore, and I think that's a small portion. And then you've got a lot of people who just said, you see the stats on the bottom. My current house is too small. I want different features. I'd rather be in a different part of town. We're going to dive into this kind of stuff here a little bit. So this pandemic has caused a lot of people to really reevaluate home, and whereas some people before said, "Hey, I can't afford to buy the house that I want," you've had more and more people say, "I can't afford to not get the house that I want or need because I need room for my kids to be in school. I need room because I can work from home. And so if I can, yeah, I'm going to, because nobody wants to drive to an office anymore." And kind of humorously enough, there's a lot of discussion that a lot of people now are no longer valuing open floor concepts or open floor plans as much as they did for previous parts, because they need room and space to get away. If I have to work from home and my kids are on the other side of the room doing their Zoom class, it's too loud. There's too many interruptions. People want more rooms all of a sudden. So go figure. So that said, so this article came out about home buyers are saying it kind of takes a village to find a house, and it's kind of a misleading title, but all that, what they're talking about here is people have said, in this case, a gentleman, Mahmoud, and I forget his family's name, they were living in the San Jose area, had a great house. They were happy with it. They loved they loved the home. They loved everything, proximity to his work. But then they realized they really didn't like the neighborhood. There weren't any kids around. And it just didn't really work when they're at home all the time. So that kind of goes on the story of, he's like, we value the neighborhood more than anything else. So they sold their home. They spent, so keep in mind, this is Bay Area, spent $1.9 million for a smaller, less desirable house, but is in a better neighborhood with more kids, closer to parks, had more of those amenities and features in walking distance. And that's what they need and want and value in their life right now. So I think we're seeing more and more of that nationwide, where people just are reevaluating where they want to live. On top of that, now you're going to have people who basically have said, I got my current house is dialed. I don't need to change it, don't want to change it. It works perfect for me. But hey, mortgage rates are cheap. Things are doing great. My home equity value is going through the roof. So I'm going to take some equity out of my primary house, and now I'm going to buy vacation homes. And so this is, they talk about it. It's, this is obviously it's a Lake Tahoe type of a discussion, but it was a twofold thing. It's sort of people talking about, let's buy houses in, whether it's resort/destination areas. In this case, Lake Tahoe, or you could do like a Telluride house or things like that. But it's also just where else would we want to be? If we can now start splitting our time because we can remote work and everything else, people are picking up more and more properties. I share this simply because now if they're buying more and more properties, they're going to do it either vacation destinations, places that they want to be, whether it's kind of the snowbird type of approach of all winter here and all summer there, or also just for long-term investment purposes. So now factor that in as you think about on the West Coast, major West Coast cities, kind of comparative price points. Portland, Oregon is still a superbly cheap market, which has strong demand. Prices are going up significantly. We're going to talk about the downside to that coming up. But so I think Portland is probably on the radar for more pressure from people buying investment properties, maybe a second home, out of the gorge, or who knows what. But it's definitely not going to help our supply of houses and kind of that overall demand. So then they talk about kind of what are the big things that people are looking for right now, right? People want a yard so they can go outside without being around other people. And we hear this on all the time. I read this in articles all the time, and this one just makes me incredibly sad because this is why I hate the pandemic. All right, people are looking for home features so they don't have to be around other people. And as a social guy, it's unfathomable to me, but that's sort of our new norm right now until we get this thing under control. Is people are avoiding people, and it just sucks. One we can definitely relate to: people want the bigger kitchen. Like I said, we had one of our more surreal Thanksgivings this year. It was, it was just kind of an odd little thing, and just things that people are looking for. It's just interesting to kind of see. But the yards are definitely kind of that big push. So let's talk about. I kind of made the allusion here to the bad news for Portland, right? So this article came out through he's a national economist for one of the title companies. 5 cities where the affordability has declined the most. Like, great, let's just go see. It's got to be these big metro markets, on and on and on. So I read it just more out of curiosity, and then I was kind of shocked to see it's Kansas City, Missouri, which makes no sense to me. Las Vegas, I can get. Philadelphia, sure, major metro area. Pittsburgh, sure, major metro. Portland, Oregon, there we are, number 5 on the list. So Portland's hit the radar for biggest decline in affordability. Granted, it's 1.6%, so take that with a grain of salt. Not awful, but this is not the list that you want to be on. That said, I don't think this gives us any risk of prices collapsing because the demand is here, right? We've got a good job base. We don't have enough houses. We're not going to have enough houses for probably a significant period of time. But it kind of puts you on that negative radar. And then kind of here's just sort of that visualization of those markets. So you can kind of see how we can stack up and compare to the others. The gray bar is really the one that you want to look at. And this has to do, it counteracts your mortgage rates with home prices and everything else. But, the house buying power is definitely down in Portland. The household income is showing down. And I think that's going to be more representative of kind of the COVID impact from hospitality, leisure, things like that. So I don't know that necessarily correlates to home buying or household income for homeowners versus just an aggregation of the Portland metro area. So the blue bar I discount. It doesn't really matter. The gray bar, that buying power is down. So we just need to watch that one. It's just an indication that home prices it's expensive in Portland, and I honestly don't see it getting better. So people ask all the time. I've had this conversation probably at least 4 or 5 times in the last month of, what do you think is going to happen next year? Next year, 2 years. Do you see it's getting any better? The pressure, so on and so forth. And this kind of echoes what I talk about, right? People say, economists are worried again about 2021, and they're worried about it because what we're seeing right now. There's another surge in COVID rates. Numbers are spiking. We've got some states are doing kind of soft lockdown freezes, whatever. I think we called ours a freeze for a couple of weeks in a few counties here in Oregon. Some places in the UK are doing more stringent lockdowns. Holiday travel is being highly discouraged, but not blocked. So if these surges keep continuing, what kind of negative pressure is this going to have on COVID rates, on the economy, on people's ability to work, reopen small businesses, restaurants, and so forth? And so even though we've got some good or promising news from the vaccine standpoint, they're even talking about now, as these numbers surge, it's going to make the deployment of vaccines that much more difficult because you've got so much more of this virus going around. So we're going to stay in this pinch through next year. And so let's fast forward, and let's say there's another series of shutdowns that are coming next year. And knock on wood, it's not going to happen, but it's not out of the realm. Well, what happened last time, right? Real estate blew up. Home values exploded because more and more people are locking down buying houses. Mortgage rates tanked. Now, if we double dip that again on top of what's already a brush fire in the housing market, it's going to be just bananas around here. So, when I tell people, the way I answer that question, what do I think is going to happen for 2021? My response here is that I don't see this getting any better next year. Mortgage rates, I think, are going to stay somewhat constant. There are articles that we talked last week about potentially those increasing, somewhat. I think it was around 3% or just a little over 3% where they're estimating it would close. Mortgage rates would be by this time next year. We'll see. But they're still arguably cheap. If you can still get a mortgage, even if it's at 3.25%, next year, if that's what the rates are at, in terms of like that rock bottom low point, it's free money still. It's still incredibly cheap. So it's with those mortgage rates and diminished inventory, your house prices are just going to keep increasing. They're going to keep going up. We don't have a way to increase supply because of the urban growth boundary. So I just tell people, I don't see this going away. Your affordability is going to get hampered. But the flip side of that is if you own a home, it's your asset it's becoming less affordable, but it's because your home equity value is skyrocketing. So if you're looking to make a move, you're looking to kind of do something, upsize, downsize, bigger yard, whatever you want to do, it's I think still a fantastic time to do it. I would recommend doing it sooner rather than later, simply because it's going to get more affordable the longer you wait. So sure, if you wait, you can sell your current house for more, but then the house you're buying is going to cost more. And so it's kind of a wooden nickel in terms of the true impact for you. If you're a first-time buyer, buy a house. I mean, I look back to when Jeannie and I bought our first house in 2001, the market was doing similar to what it's doing now, is starting a big ramp up. And it was fantastic for us, for our first time home buyer perspective. And I think this is one of those opportunity points for people. So I just, I can't stress enough. I think it's a good time to be looking at doing something. Life is about risk and chances and timing, and more so about the timing standpoint. This is the time. So that's just my gut. And I'd tell you the same thing, even if I was not in this business, I would tell you the same thing. Like, this is when I'd go big on real estate. So there you go. That's your weekly update. The rain stopped, the sun's out. Supposed to have a nice week. So stay safe. Hope you're easing back into the school and work schedules after your Thanksgiving breaks, and be safe. We'll talk to you guys